Today, Paxos halts minting of Binance's stablecoin in the latest crackdown from U.S. regulators. Coinbase CEO Brian Armstrong says the company is ready to defend its staking services in court. And PitchBook just dropped the latest data on VC investment trends for crypto. We break that down for you. Welcome to CNBC's Crypto World. I'm Kate Rooney. Digital currency prices are taking a hit this morning following more U.S. regulatory pressure on the industry. As of noon Eastern, Bitcoin slumped by more than 2%. Ether, meanwhile, was slashed by more than 4%. And Solana sunk a whopping 8.5%. Okay, let's catch you up on some of the top stories, starting with the latest crypto crackdown. Paxos will no longer mint Binance's USD stablecoin at the instruction of the New York Department of Financial Services. In a statement, NYDFS cited oversight issues between Paxos and Binance and said it was working with the company to ensure that it handled redemptions in an orderly fashion. For its part, Paxos assured customers that BUSD tokens issued by Paxos will always be backed one-to-one with US dollar reserves. But the news comes as the Wall Street Journal reported on Sunday that the SEC is probing Paxos over the BUSD token too. The Journal's report cited people familiar with the matter who said the agency planned to sue Paxos for allegedly violating consumer protections and offering an unregistered security. Paxos is a key partner in PayPal's plans to launch its own stablecoin, and now the payments giant is reportedly hitting some speed bumps with that project. Bloomberg reports that PayPal wanted to launch the stablecoin in coming weeks, but is delaying the project until it can make sense of the regulatory scrutiny on Paxos and broader crypto industry. A PayPal spokesperson told CNBC it is, in fact, exploring a stablecoin and that it'll work closely with relevant regulators if and when the company decides to move forward. At the same time, Coinbase's CEO is ready to go to court to defend the other crypto offering facing a lot of regulatory scrutiny and crackdowns, staking. Last week, Kraken halted its staking operations and paid a $30 million fine as part of the SEC's claim that the company offered unregistered securities. Chair Gary Gensler even went a step further, saying staking as a service operators, lenders, and others had to follow U.S. securities laws. While Coinbase CEO Brian Armstrong tweeted on Sunday that the company's staking services weren't securities and it would, quote, happily take the issue to court if needed. In a blog post, Coinbase also claimed the new pressure from the SEC is, quote, unnecessarily aggressive and could push users offshore to unregulated platforms. All right, let's move on to our main story. PitchBook just dropped their latest report on venture capital investment trends and emerging opportunities in the digital asset space. Crypto World's Talia Kaplan spoke with Robert Lay, senior emerging technology analyst at the research firm, about those fourth quarter trends and what stood out.
Your new crypto report on VC trends and emerging opportunities for Q4 just came out. And of course, there was a big news event that took place in that quarter, the collapse of FTX. So your research reveals that VC deal activity in Q4 was significantly less than the rest of 2022. Do you attribute that to FTX's failure, or are there other factors at play?
Yeah, definitely part of it is because of the FTX collapse. But if you look at the trends, we track monthly and quarterly flows from venture capital into crypto companies, and it's been on a downward climb since May of 2022. So that's when the Lunar Terra collapse happened, and then shortly after, Three Arrows Capital and Celsius and BlockFi. So it's been on a downward trend since really mid 2022. We saw the lowest amount of capital raised in November and December of the year. So those are the smallest amounts, and a lot of that was accelerated by the collapse of FTX.
So let's take a closer look at what your research found. In Q4, VC deal count reached its lowest level since the fourth quarter of 2020 with 345 deals, and that represents a drop of about 40% from the prior quarter. The report points out that the third straight quarter-over-quarter decline to $2.5 billion is the lowest amount of capital invested since Q4 2020. So why do you expect investments to continue to decline this year, as mentioned in your industry and technology outlook?
What's going to happen is you talk to any investors in this space right now is that what happened in the bull market, 2020, the 2022 crypto bull market, the diligence cycles were really compressed and deals were happening super fast. So people weren't looking really closely into what these businesses were doing, what the business models were, who the users were, how they were growing. And so what you're seeing is now in this new paradigm that we're in, all of that has been slowed down. Diligence cycles are going months now instead of days and weeks previously in the bull market run. So because of the slowdown in capital deployment, you're going to see a lot less activity going into the space. And we already see, we also tracked January this year too. That January was even lower than December. So that was already what we predicted in December, that the first half of this year, activity is going to be really low just because investors are taking their time, they're looking at business models, they're looking at teams, and they're not deploying capital as quickly as they did in 2021 and 2022. So we're going to expect to see that continue through probably mid this year, but there are a few reasons that we think that it could tick back up later in the year. Is one, investors start getting more comfortable investing in companies because they're looking at them, they're doing due diligence, they're talking to teams. Two, there's just a lot of capital sitting on the sidelines. We also talk about crypto native or crypto focused VC funds. They raised over $20 billion in 2022 alone. So that capital has to be deployed over the next 2 to 4 years. And so we're going to see investors having to invest into crypto companies during that time period. So maybe in the later half of 2023, you can start seeing investments into crypto companies tick back up.
Can you take us through some of the bright spots of the last quarter? What areas continued to attract investors?
Yeah, really two core buckets that you're seeing a lot of investments. It's infrastructure and metaverse and gaming. And so I'll just give you the high level investment thesis. In the infrastructure, investors know that in order for these crypto applications to reach the 1 billion user mark, you need to have development platforms and layer ones and layer twos that can support that 1 billion users. So investors right now are investing in the picks and shovels of the crypto space, and eventually, hopefully, those applications will be built out by developers and companies in the future. And then on the metaverse and gaming side, investors are betting that eyeballs, which are now in on TikTok, YouTube, Instagram, like Web2, those eyeballs are going to shift over to the metaverse and gaming sometime in the future. So there's been a lot of money going into the metaverse and gaming space as well.
So expanding on that further, looking at crypto VC deal activity by segment in the fourth quarter, Web3 had the most deals and DeFi had the fewest. However, for the year, DeFi deals took the top spot in terms of value. Can you explain that?
Talking for the quarter, same thing. The trend still holds. You're seeing Web3. So for us, we're in our definition of Web3, we include gaming and metaverse under there as well. So gaming, metaverse, NFT platforms, all of that falls under Web3. So for the quarter, you start seeing a lot of the shift over to Web3 because of the metaverse and gaming deals. But for the year, DeFi, just because at the beginning of the year, if you really look at January, February to April of 2022, there was a lot of big DeFi deals early on before the Terra Luna collapse. After that collapse, there was less interest in DeFi, but also Uniswap did raise a large $165 million round later in the year, I think in October 2022 or November. So that really drove up that deal value as well for DeFi.
Let's talk about the emerging opportunities outlined in your report. One is real-world asset tokenization. For those who don't know, that's the process of representing ownership of things like property, art, or a financial asset using a digital token on a blockchain. PitchBook views RWA as one of the strongest use cases for crypto to date. What would you say are some of the benefits associated with this? Where do you see RWA tokenization headed in the future? And what challenges are in the mix?
Like you said, RWA tokenization, real world asset tokenization, is just bringing any real world asset, financial asset, property, artwork onto the blockchain. And we've definitely seen some examples of that already happen. Even in just last quarter, we saw JP Morgan, they conducted a live trade using tokenized currencies and tokenized government bonds, and they used DeFi protocols to do that. They did it through Aave and Uniswap. So the benefits of RWA tokenization is that it's not intermediated, which means you don't have to pay any fees to an intermediary. It settles either immediately or very close to real time. And it's also a lot cheaper. So it's cheaper, faster, and all that. So that's one of the main benefits. And you also saw Maker, which is a borrow and lending protocol. They partnered with Huntington Bank August 2022 to do the same thing, where it's backed by Huntington Bank's a credit facility to be able to tokenize private equity credit and then commercial real estate. So the ability to do, what we see is going to happen, that is a lot of financial institutions are going to start tokenizing because they can remove intermediaries and save on costs, but also speed up those transaction fees or like transaction timelines.
All right, that's it for Crypto World today, but we'll be back again tomorrow with a lot more. We'll see you then.